Well, here's another debate you hear of a lot: diagonal spread or a vertical spread. Welcome, options traders. And this is, again, one that I've heard a lot in 2020 and going into 2021 because of the uncertainty that's out there and all of the ups and downs in the markets. And so a lot of traders are turning to spreads. And one of the debates that you hear is whether you should use a diagonal spread or a vertical spread. And as I've always talked about, that right off the bat is just a bad way to approach trading, because all strategies are tools. It's never a question about which one is better. It's more of a question about which is better for your goals. So to shed some insight into all of the traders out there who want to talk about the benefits of diagonal spreads and all of those who talk about the benefits of vertical spreads, what is something that you should always be looking at to decide which one to use? Now, to get started, we have to talk about some of the different types of spreads. There's actually a lot of them in the markets. But if you mention the word spreads to most options traders, they're going to at least readily come to mind will be diagonal, vertical, and calendar spreads, also called a time spread. So as a quick review, remember that a diagonal spread means we're dealing with different expirations and different strikes. So maybe we buy the March $100 call and we sell the January 105. That would be a diagonal spread. A vertical spread means that we have different strikes, but they have the same expirations. So we might buy the January 100 and sell the January 105. So notice that in both cases that we're long the 100 and short the 105, but with the diagonal we have different expirations. And the third, again, is the time, or also called a calendar spread, where you will have the same strikes but different expirations. So here we might be long the March 100 and short the January 100. See, now we've got the identical strikes, we're just switching off the expirations. And as is true for all strategies, there are reasons for taking one of these over another. Now, for the diagonal spreads, they are a combination of vertical spreads and calendar spreads. They're a little bit of each. And it's actually true for all strategies. All strategies have links that are common among others. And it's up to you as a trader to say, which of these links do I want and which do I not want? So traders must decide which pieces of the puzzle here have benefits. In other words, is there a mathematical edge? And if there's not, let's spin it out of the trade. Why do we want it in there if it's not really helping? So as I talked about in a previous video called Spread Connections, Diagonals, Verticals, and Time, recall the connection. A diagonal spread equals a vertical spread plus a time spread. You could think of that as a synthetic way of creating it. They're just two different ways of approaching it or of looking at it. So let's say that we have a diagonal spread that we're considering. Maybe we want to buy the March 50 and we therefore sell maybe the January 55. We have different expirations and different strikes. But now we take a closer look at our calendar spread or the time spread, and we find out there's no real mathematical edge. Well, if that's true, why do we want it? Why do we want to pay for something that's not really giving us a benefit? If that's true, let's spin it out of the trade. So graphically, if we are going to sell the calendar spread, maybe I would sell the March 50 and I would therefore buy the Jan 50. That is a short calendar spread. But if I do that, notice what happens. The March 50s cancel out and I'm just left with a January vertical. So in this case, people could argue all day long that they like the diagonals better, but again, if there's no benefit in the time spread, let's not put it into the equation. Let's get rid of it and just do the vertical. So I hope this helps people to at least give you some insights into some of the things you should be thinking about for strategies. What you don't want to do is to say, well, I just learned about diagonals, let me go put on a diagonal just because I like it. Or let me put on a vertical just because I like it. You need to understand that there are very good mathematical and strategic reasons for choosing one strategy over another. Sometimes it's for what we just looked at here, for mathematical edges. Other times it might be for potential hedges, rolls, and morphs. But if you're not taking those into account, you're missing the very essence of options trading. So for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a brand new technical analysis course, all at optionsatoz.com. Also, please join us on the Facebook trading group, Options A to Z, and you can find a link in the description below.